Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lanny and Bert, the Dividend Diplomats. This video, I'm going to answer a very simple question, Lanny. The question, should I invest $1,000 in this stock?
$1,000. Let's get 1,000 likes, guys. Smash that subscribe button. Give this video a thumbs up. Bert's got a stock on the table. We're about to talk about it. See if Bert's going to be about it. Is he going to put some money where his mouth is? Bert's in this growth phase mindset. Bert's trying to YOLO it right now, guys. He is trying to figure out some investing plays for long-term growth, obviously, but trying to catch the sword that is falling on a certain stock.
Yeah, and you're right. This is technically a dividend play because they just announced their first dividend. So they have a 1-year dividend growth rate. But we're not going to pretend like this is you're buying this one for the yield. That 0.17% dividend yield isn't going to boost the passive income. But that's why you look at it.
Don't spend it all at once, Johnny.
Right. Apple started somewhere from a dividend growth perspective. Google started somewhere from a dividend stock perspective, obviously. All the tech companies eventually start their dividend increase streak. So you know what? Do you get on the ground floor? And to your point, Lanny, do you take advantage of this dip in this massive tech company?
Bert, you want to peel the Band-Aid right now and just rip it about what stock you're talking about?
Sure. Salesforce, ticker symbol CRM. I previewed this idea in a video a couple weeks ago when I talked about what am I going to be doing with my WestRock cash. Acquisition still hasn't closed. I still haven't sold my position in WestRock. So that's why I'm looking at it right now. Do I even wait for the WestRock acquisition to close? Do I even wait for that? Should I put $1,000 in Salesforce? Should I invest $1,000 in Salesforce right now?
Yeah, look, Bert's looking to buy the stock, guys. Again, they had a bad earnings release a few weeks ago. They're down 17% in the last month. So, guys, last 30 days, down 17%, losing quite a bit of market cap. Had a bunch of acquisitions over the years. The most notable one is Slack. So, for all you businesses out there or those that work at companies, maybe you use Slack. I think, Bert, you use Slack.
We do use Slack, and we use Salesforce for a lot of our customer tracking from there. And I can tell you the Salesforce contracts are expensive. Licenses aren't cheap. And once you're in Salesforce and once you're integrated into Salesforce, it is nearly impossible to switch away from Salesforce because we've gone through this evaluation multiple times in an effort to save money. It's hard to pull it out once you're in.
Interesting.
Yeah, but that's really why they acquired Slack and they acquired Tableau and some of the other ones. They wanted to battle Microsoft in a different way, where rather than Microsoft launching all of its suite of average products to above average, and some are just terrible products, they're like, we're just going to buy the best in Salesforce. We're going to buy Slack. We're going to buy Tableau for reporting, but they're all going to be different brands and different stacks, but you can bundle them together. So that was the thought and the approach. But the earnings slowed down a little bit. The growth stopped for Salesforce, and that's what really spooked investors and caused them to drop 20% after earnings. In the last quarter, revenue missed what the analysts were expecting. It was 9.13 billion. Earnings were 2.44 compared to the expectations of 9.15 billion revenue and 2.37 per share in earnings per share. So I guess it made it from the adjusted standpoint, but it was not great. They didn't knock it out of the park. They just kind of barely missed on revenue and barely beat on earnings.
Which obviously sent the stock price tumbling for this growth stock. Again, that has been trading much higher than where they are now, which currently is $229. But they're lowering guidance right now, below what the analysts were hoping for this year, keeping their full year outlook. But fiscal year 25, not going to quite hit the $40 billion threshold that I think that they were all really secretly trying to hope for. But it seems like they'll probably be well over that $37 billion in revenue standpoint.
Yeah, so in the short term, the picture wasn't great. It was below what the analysts were expecting. So the combination of that and the actual results not really meeting analysts and exceeding analysts' expectations sent it tumbling. Now, I think the day of this video, we're recording it on June 13th. Um, Management talked about how they're going to keep focusing on data cloud solutions. What's really the path forward? Data cloud, they're going to find their own way and their own path to take advantage of generative AI, but really heavily in that data cloud solution and working on making the most and using their massive consumer database to its full advantage. That's where their focus is going to be.
Yeah, I mean, maybe you could see that as a business. Maybe your CRM tool, Salesforce, could tell you exactly what your clients need, when they need you, and how
Mhm.
you could be a perfect match or how to become a perfect match for that client that you're trying to attract, or
Yeah.
even to retain your current clients. Maybe it'll tip off when you need to touch in with them based on
Yeah.
feedback or review ratings, or I don't know. I just don't know
Set up a
how
new,
the AI works with
yeah. Set up,
CRM.
hey, set up a new customer, generate their full profile, and from this email generate their full profile and send out an invoice. I don't know, you're right. Like, it's unique because it's not fully consumer facing in the same way as like Google is or Apple, where you need to build generative AI into like the day-to-day interaction. Salesforce has a different play on it.
Yeah, it'll be interesting. Obviously, I think all markets right now love AI, artificial intelligence, data, cloud.
Yeah, it's everywhere, and it's getting, honestly, it's getting kind of annoying. Everything has generative AI, and it's not
It's not like
always.
it's been around for a while, guys.
Yeah,
Let's, keep
no,
it real here. This is just data marketing, you
yeah,
know.
it is, and you don't need it in everything. You don't need it in every single aspect of your life. Sometimes it does help though, but not everywhere. So they fell behind. Guidance, long-term full year outlook stayed the same. Short-term, a little bit of pain, not a lot because the number is still great and it barely missed expectations. So it's not like they're off by a lot. So that's when I really started looking at, is this the time to buy them? It wasn't just that the price fell. It's when you peel back, you saw what happened in earnings, that it's just a slight off. Is 20% an overcorrection for what their actual earnings result had? And well, I guess we'll find out. And what are we going to do right now, Lanny?
What are we gonna do right now, brother?
We're going to run them through our stock screener because that's what we have to do here. They are a dividend stock. So we get to put them through that screener.
I will say, the company is at 222 billion by market cap. So I think it might be a little hard for them to get acquired as well by like Microsoft. That would be pretty wild.
Yeah, I'm thinking for a second here. Who on earth could acquire Salesforce? Amazon? Apple? It would have to be one of Apple, Google. No, Google would never. They would just build out their own version of it. Maybe Amazon if they say we want to just go after them. Or they could sell the business off into pieces too and some get some acquired. All right. Anyway, let's run them through the screener here that has those three metrics: PE ratio, payout ratio. Talk about the history of dividends, which we already kind of covered earlier on, and then that dividend yield. Lanny, why don't you kick us off here at the PE ratio?
Let's kick it off, guys. CRM again, trading at 229.03. Analysts are expecting $9.90 in earnings, a higher price to earnings ratio of 23 times earnings, but not so high that it's over the market. It's still under, showing slight signs of undervaluation for a growth stock.
Yeah, their payout ratio, their annual dividend is 40 cents. That gives you a payout ratio of 4.04%. So again, they very small dividend. We don't know where their dividend growth is going to go.
The lowest payout ratio that you'll see on this channel.
Yes, they clearly have plenty of room to keep growing that dividend. So they check that box.
Yeah, I mean, a 0.17% yield. So you're not buying it for income, you're buying it for the growth play here, guys. Again, up 10% this year, up about 50 something percent over the last 5 years. CRM, over 200 billion in market cap. Bert's debating. What do you guys think?
Yeah.
Should he buy $1,000 worth of Salesforce stock? Let us know in those comments below.
Yeah, I'm very interested to see what everybody thinks here. I'm honestly on the fence about this one. I think it would
Gonna
be,
be a schema.
yeah, getting 4.5 or 5 shares of CRM might just be fun. I have plenty of dividend stocks in my portfolio. I don't really have growth. This could be a dividend growth and a tech stock type play that's unique to my portfolio. So that's where I'm going to leave it. I'm looking very forward to reading all of your comments down there.
Where you're like, this could be a fun investing. Or you just like roaring kitty. I like the stock.
That's right. So everyone, again, let us know if you haven't already subscribed to the channel. Give this video a thumbs up. Remember, you're either with us or you're against us. Jack.
That was Bert, the Hurt, and Lanny from the Dividend Diplomats. Over and out.